Eric Muathe, Muathe.com, with another mentorship video, and this is gonna be part 2 of the series of the video entitled Fundamental Error, and we are just following through on this idea that shorting a stock whose RSI is trading below 30.90 is not a good idea. And conversely, it also means that, for example, if we take a look at the Nasdaq in the same time period, Nasdaq, that whenever you see an instrument whose RSI is holding above 69.1, again on the monthly, that just means that that's a very strong instrument and you need to wait for it to come off this level before you can look for areas where you can go short. Now I want to just show you some number of instruments that do highlight this idea, so we can reinforce the idea that it is almost important, or at least very critical, that we don't rush into shorting strong stocks. For example, take a look at Lockheed Martin, LMT, which has had a nice run on this 2-year weekly chart. You can see nice run over the last 2 years or so, and it looks like it's come off the highs here. So anybody who went short at about 205, stocks trading or has gone as low as 185, so that's a big chunk of change down. And so one would wonder whether this is when to go short. So yes, a couple of things, and there's a method that I use, or at least I try and teach, which is that if it breaks below this level here, now that we have the bending of the 10-week moving average. But let's not get distracted. You can learn more about that video here on a webinar that I did, I believe about 1 or 2 years ago, and this is the title of the webinar: When to Sell Winning Stocks. So this is part 1. There should be 3 parts, and that goes into detail about the methodology I'm talking about. When it comes to shorting winning stocks, you're better off waiting for them to turn around. In other words, you're better off waiting for the 10-week moving average to coil down, and when they make a fresh weekly closing low, for example, if Lockheed Martin was to break the recent weekly closing low, then that's when you'd go long. But that's not the basis of this video. This is actually sidetracking. So let's go back to what the video is about. We take a look at Lockheed Martin from a monthly. Now you see the different picture. So let's go back. Here we see the weekly. Take a look at the daily and the hourly. Now you can see the hourly, daily, weekly. Compare that to the monthly, and you suddenly see the strength in the stock. Here, ever since 2013, which coincidentally is around the same time when the Nasdaq moves above 69.1, you can see the stock has remained above 69.1 since then. Anybody who understood this principle of avoiding shorting stocks that are trading above 69.1 could have known, and should know even now, that this is not a stock that you'd want to short just based on the strength. This is absolutely a very strong stock, and this was ever since the breakout, let's call it here at about $90 or $85 or so, and it's gone on to trade as high as past $200. And even though it's had some pullbacks, you get monthly pullback, and even now monthly pullback, they seem to be shallow, and you're fighting the momentum, and the momentum has been strong. In fact, if you take a look at the long-term view as an example, let's take a look at the periods where the RSI was trading above 69.1, and that's the only thing we're considering here. You see that from this point to until when the RSI finally gives up is somewhere around here, which is closer to the high. So shorting during this period was not a good idea when the RSI was above 69.1. So you can see the stock did drop slightly during this period here, which happens to be when the RSI moves back below 69.1. There's also another period, this period here. You can see, generally speaking, the stock held above this price range, stayed above this entry when it moved above 69.1, and it's only when it moved back below 69.1 somewhere here, which is the highs, that it finally had a drop in 98 going into 2000. So the principle here is true. Just like over the last couple of years, RSI has held above 69.1, and we know that the next sell point for the stock is when it moves back below 69.1 at some point, which could give a sell signal maybe in the 200s or somewhere around here. But definitely you do need to wait for that 69.10 level to be breached to the downside. So same principle we can use as to why we could and continue looking at the market as being strong, because if you take a look at the Nasdaq, again, the monthly on the Nasdaq as of right now on this monthly chart, you can see here there's no reason to go short this instrument until it moves back below the magic number of 69.1. Now the risk is, if you try and short an instrument that is so strong, the risk is something similar to what happened here in the 90s, which is at the end of the bull market run in 2000 or early 2000. You can see that there's an accelerated move or a hyperbolic move higher. So if you're thinking that this is the end of the current bull market, you have to be aware that as long as the RSI is holding above 69.1, there is a chance it could go into a hyperbolic move, which means shorting this is not a good idea. Let's take a look at another idea, ABC, and we can see here since 2013 a nice move above 69.1 on the monthly, and since then, even though the stock has had a couple of pullbacks on the monthly, for example moving from $70 down to about 62, shallow pullback followed by a sharp increase in price. Again, shallow pullback followed by a sharp increase in price, and all these pullbacks have been shallow followed by a sharp increase in price. Why is that the case? Because in this phase of a stock's run, whenever they are holding above 69.1, it just means that pullbacks are shallow, rallies are very strong. So again, we need to stay away from that fundamental error of shorting something that is this strong because of that strength in the monthly chart. And anybody who would, over the last 2-3 years, would have been aware of this strength in the stock since it moved above 69.1 could obviously have avoided trying to short this amazing run. In fact, the stock was a buy on multiple occasions because of it gave investors multiple monthly breakouts. All this after at least 1 month of rest. You can see that all these are nice breakouts in the stock. So it gave you multiple entry levels during all these breakouts. So instead of going short or looking for short opportunities, the stock was actually giving you nice entries. Even right now we see 1 month down, and so in the following month, should the stock break out again, that's going to be a fresh buy signal because we've concluded the month of May. So any move back above the recent monthly closing high is going to be another reason to continue holding on to the stock or even play potential upside. And there's also another cautionary example here, which means that sometimes whenever we see a stock move above 69.1, the thinking can be that, oh boy, it can't hold above that. Why should it hold above 69.1 for more than a couple of months? But here's a perfect example. We see a stock moving above 69.1 sometime in the middle of 2010, breaks out on the monthly, nice breakout, and since then, other than this blip here, about a couple of months down, but it recaptured back above 69.1, you can see the stock has generally been above 69.1 going back to about mid 2010, about 5 years. And this is the risk, is whenever you think that a stock cannot continue moving higher, it can. And even if you take the most recent breakout here as being the most recent entry back above 69.1, which is during this period, and the stock has maintained above that level, that would have taken you from a price of about $70 all the way to the current price and the highs of about $320. So as long as this is the case, and as long as you haven't seen a move back below 69.1, you should always think long. Think breakouts, think momentum, but you should not take the other side of the trade, which is to short. That's not a good idea in terms of going against the trend, going against the momentum. Eric Muathe, good luck, peace, blessings. Yeah, woo. I am out. Wait.